at this very market right here, markets have been moving downward, and then we see this very horizontal boundary. You will see that this is a great breakout to trade. You see, market breakout right at this very point. And after this very breakout right here, what happened in the market? Market move a little bit upward, okay, and definitely come all the way to the downside. If you trade this kind of breakout as well, you are going to lose your money. In this video, I'm going to show you the kind of breakout you should trade practically on the chart and the three types of breakout that we have in the market that you need to pay attention to. This video is going to guide you through the right breakout trading strategy that you should use right now. So watch this video all the way to the very end. Consider supporting this channel by leaving a like for this video, subscribe if you have not, and turn on the bell notification for more Forex videos like this one. Also check the channel for other Forex content. We have three types of breakout in the market, and the first one is breakout of trending market. Let's say, for example, market has been moving upward. Market move upward, come back down, move upward, come back down, move upward, come back down. If you notice, this market breaks out. How? Market breaks out of this level of resistance, push upward, create a new high, come back down, retest, move upward, break out again on this level of resistance, create a new high, move upward, come back down, break out on this level of resistance again. So this is a breakout in a trending market. The same thing happens when the market is coming down, okay? Breakout on the support level, market breakout on this support, move back down, create a new low, breakout on this support level, move back down, create a new low, breakout on this support level again, move back down and create a new low. This is breakout on a trending market. Either market is moving upward or market is coming back down, as you can see in this very case. The second type of breakout you need to pay attention to in the market, if markets have a horizontal boundary, let's say for example in this very case, and we have another horizontal boundary around this very area right here, and market has been moving between this horizontal boundary. Let's say for example, market move upward, come back to this very point of resistance, move back to support, move back up resistance, and then come back down again, hit support, move back to resistance. Market have possibility of coming back down, move upward and break on this level of resistance and begin to move upward. Or the market can come back all the way from here to the downside to this very level of support and then break out on this level of support and begin to move all the way to the downside. So this is breakout of resistance support in a ranging market. The first one was in a trending market. This one is in a ranging market. And the third type of breakout you need to pay attention to is what I called breakout of consolidation, which is very, very powerful. Let's say for example, market was moving upward, okay, and market have created a new high and then move up again, and then we see a consolidation. A consolidating market is a market that is not moving up or down, and the candles are moving side by side, and it do form in this kind of formation. This kind of breakout is very powerful because at this very area, market is building momentum, and after every build up of momentum in the market mean that market is going to break out on either side. And if the markets break out in line with the trend like this, then it means that this market is going to continue this movement to the upside in line with this very upward trend. The same thing happened for a downtrend. Let's say for example, if the markets have been coming back down, markets move down, retracement, move down, and then it forms a consolidation right here. If this market break out to the downside with a bearish candle, then it means that there is a high possibility that this market is going to continue this movement all the way to the downside. Why? Because every time the market consolidates, it means that there is a build-up of momentum at that particular region, which means market have possibility of breaking here and start moving all the way to the downside. This is very, very important, and this is the three types of breakout that we have in the market. Now, among these three types of breakout that we have in the market, the best breakout to trade and have 90% of the market moving in your direction is this kind of breakout of consolidation, and that is the only breakout you should give the most priority on your chart. If you see it on your chart, that is the best breakout you should trade. Every other breakout should be neglected on your chart, else you will have possibility of having this kind of false breakout, and market is going to take you out and move in the opposite direction of your target or prediction. And this is very important. So the kind of breakout you should pay attention to and start trading right now is breakout of consolidation in the market. And I'm going to show you right now on the chart practically where this kind of breakout occur and the powerful result you can get from this kind of breakout. First of all, before I show you an example, you must understand what a consolidation is in the market. If you look at this very market right here, you see that the market is consolidating right here. The market is moving side by side with this candle moving side by side right at this point. When you see this kind of movement in the market, it means that the market is consolidating. And another example here is this very point, okay? If you see the market moving side by side, that is the candle moving side by side, in this kind of formation, it means that the market is consolidating. There is a build-up of momentum at that very particular level. And if it breaks out to either the downside or the upside, that means the market have high possibility 90% of the time of going in that very direction. So the first example here is right at this very point. You see the market was consolidating, and we can draw out this very line at this very point, okay, of consolidation. Then what happened? Market move upward from this very area, and we see a typical breakout. Market breaks out right here, and then at this point of breakout, since the market was moving upward, we see the market move upward from here, come back down, move up again, create a new high, and then we see consolidation. That means market is about to move upward after a breakout. So this market breaks out here. What we need to do right here is to take a long position. So we're going to place our trade right at this very point, and our stop loss is slightly below this our level of support, and we are going to enter a position to the upside, and that should be a 1:2 or 1:1.5 risk reward ratio. So what happened afterward, after this very breakout? It discovered that the market began to move all the way to the upside after this very breakout and give us a 1:1.5, 1:2 risk reward ratio right here, as you can see. So this is the perfect kind of breakout you should trade in the market. Market breakout of consolidation is a perfect kind of breakout you should consider trading when trading breakout. We said that example right here. Market was moving upward at this very point, create a new high, market come back down, create a new high, and then we see a consolidation right at this very point. So market consolidates at this very point. You see the candle moving side by side right here, okay? Market was not actually coming down or moving upward in a horizontal boundary, rather market was consolidating. So after this consolidation, we want to see the market break out. So the first thing here is to wait for the market to break out, and the market did break out with this very candle right at this point. So after this very candle breaks out, we want to take a position with a buy. Our stop loss have to be below this level of support, and our entry have to be here, and we look for 1:1.5 and 1:2 risk reward ratio. So after this breakout, let's see what happened on the price action. So if you look at it very well, you discover that market begin to move downward a little bit, and then from there market begin to move upward in the predicted direction. So this is a very important breakout to trade. If you trade this kind of breakout, you should be in the right direction of the market. The third example of breakout of consolidation is what we see right at this very point. If you look at this very area, you discover that the markets have been moving side by side. So we see the candles here moving side by side. The candles were not really moving down or up. That means the market have possibility of moving up or down aggressively. So we can see this is an area of build up of momentum. So if momentum is building up on this very particular resistance, it means that if it breaks upward, the market is going to continue upward, and if it breaks down, the market is going to continue downward. But in this case, we want to trade in line with the trend. So since we want to trade in line with the trend, we want to look at the market breakout on resistance with a bullish candle, and we see that happen right at this very point with this very bullish candle right here. So market breakout from a bullish candle that closed above every other bullish candle right here. So we want to take a trade right at this very point. This is our entry right here, and our stop loss have to be slightly below this level of support at this very point, and we allow the trade to run. So if you take this trade, the market should be in your favor. Look at how the market move all the way to the upside, and you should be in the least 1 to 1.5 and 1 to 2 risk reward ratio, and you should meet your target with this kind of breakout. So this is the kind of breakout you should consider trading on your price action when you see them on the chart. This is another example of a breakout of consolidation in the downtrend. Market is coming back to the downside. If you look at it, market move back down from this point of important resistance, come right to this very area, and market begin to consolidate right at this very point. Market was not moving up or down. We see the candlesticks right here moving side by side. So there is a consolidation happen right at this very point, which means a breakout downward in line with this very new trend is going to make the market to come back to the downside. So we want to pay attention to market breakout with a bearish candle. And once that happens on the price action, we want to take a sell position to the downside. So what happened right here was market move up a little bit, and then we see a breakout right here with this very candle, and afterward market breakout. After the breakout, what happened is market begin to move all the way to the downside. So our stop loss have to be slightly above this very level of resistance right here, and our entry have to be at this very point, and we look for 1 to 1.5, 1 to 2 risk reward ratio. What happened after this very breakout of consolidation is that the market began to move all the way to the downside with aggressive move, as you can see right here. So breakout of consolidation is the best kind of breakout you need to trade. Especially you need to trade it in line with the trend. That means if market was moving upward and then you find that consolidation, then the market break with a strong bullish candle out of resistance, it is the best breakout trade on your chart. And if market was coming back down in a downtrend and market consolidate and then break out of that consolidation with a bearish candle downward, then that is the best sell position you should take on your price action. This is the best kind of breakout I have taken personally as a trader, and that is what you should do. So if you apply this in line with the trend, is going to change the way you trade breakout completely. If you gain value from this very video, please consider supporting this channel by leaving a like for this video, subscribe if you have not, and turn on the bell notification for more forex videos like this one. Also check the channel for other forex content. Join our Telegram channel with a link in the description of this video and also in the pinned comment for technical fundamental analysis and other forex updates. If you want to watch my video on the best way to know when a resistance is going to break, watch this video right here. And if you want to know how to trade resistance support properly, watch this video right here. It's going to help you. Thanks for your support.